Okay, so let's just have a look at where we got up to last lesson. We, for this exercise, completed the adjustments in the exercise sheet. So we adjusted each account that required adjusting and we added additional accounts to the bottom. I've classified all of the individual accounts and then I reorganised the spreadsheet into their classification groupings. We also, last lesson, started the general journal entry, and over here I've got the balance day adjustment double entries. So what we're going to do now, still on the 30th of June, because it all happens at the end of the accounting period, we're now going to close off the revenue accounts to profit and loss. Oh, sorry, we've done that. We closed off the revenue accounts to the P&L summary. Now we're going to close off the expense accounts. Expenses are normally debited. To close them, you have to credit them because we want to reduce them to zero. So the debit account is going to be P&L summary. That will be debited. And credited will be the first expense account. So let's bring in the first expense, and for me it's cost of goods sold. So I'm going to do that as a formula. Bring it in. Bring in the amount for cost of goods sold, and we've got quite a few expenses, so I'm going to have to drag down quite a number of rows and then delete everything that is not an expense. And for me, the last expense is telephone expenses. So I'm going to delete that. And there's an account that I need to add into this that is not an expense, but it is an account that has to be credited to close it off. What is that account? Pardon? Sales returns needs to be added to this entry because sales returns are debited every time they increase. They have to be credited to close them off as well. So I'm going to bring in the sales returns figure, bring the amount in, and then bring in the account amount. All those amounts are going to go into the credit column. So I'll just label it credit. Copy that down. Now I can work out how much the P&L summary will be debited. So that will be auto-summed. Okay, it's still not showing up, so I'm just going to have to make my window a little bit bigger, and there it is there. So auto-sum all of my credit accounts, and I get 24,875. Can someone confirm that that's correct?
Yes.
Okay, excellent. So they're my expenses that have been closed off, including sales returns. So I'm going to put the narration in closing entry. And we're just down to our last couple of entries in the general journal. What's the next one going to be? This is where we transfer. We can calculate our profit for this business now because in effect, that figure there tells me the 54,200 that figure tells me my total revenues is 54,200. My total expenses are 24,875. So I can tell I've made a profit because I haven't made more expenses than profit. My expenses are smaller than my profit. So my expenses are smaller than my revenue, so therefore I've made a profit. So my profit is going to be equal to, so I'll work out my amount, equal to total revenues minus total expenses. This business has made a profit of 29,325. So that's debit and that's credit, and the accounts are going to be P&L summary will be debited and capital is going to be credited. And I know capital is always credited when I've made a profit because the owner is going to benefit from that profit. That profit will be transferred to the capital account, and because it's a profit, it will increase the capital, so it's got to be credit. next entry is a transfer of drawings to capital, because at the end of the accounting period, drawings is also transferred to the capital account so that the owner can keep an eye on how much he or she is taking out in drawings and its effect on the capital account. So drawings is the way the business repays the owner's investment, and this business has taken, or the owner has taken $1,000 in drawings altogether. So the effect on the capital account will be to decrease it, so capital is going to be debited and drawings will be credited to close it off. Okay, any questions? Are you following this, Andrew? Do you have any questions?
Well, when the expense P&L summary, right? I click enter, so the equal sign, and then I go cost of goods sold, click that. Yeah, that's all good. And then I press enter, and then I want to go drag down from all the other summaries, all the other expenses. It just doesn't work at all.
You mean the amounts?
Yeah.
So are you back here bringing the amounts back in?
Yeah, it's not working well. I'll actually go tell how it works.
Okay, that's good.
I just got it to work.
All right, excellent, well done. All right, last group of entries in the General Journal appear on July 1. And what do we call those? They are the reversing entries, that's right. So I've just got to format my cell here because it's not formatting to text. So I'm just going to go General, and then I'll just have to type that in again, and it should be fine. Now my reversing entries basically mean I have to reverse all of these balance day adjustments, just the balance day adjustments. So what I do is I just copy them. Copy the whole lot, just the balance day adjustments. Paste them down here. And then I reverse the accounts. So here I've got commission revenue debit, unearned revenue credit. So I'm going to make that unearned revenue debit, and this is going to become commission revenue. And then up here, then prepaid expense debit, advertising credit. So that's going to be advertising debit, prepaid expense credit. So just reverse them like that, and it won't take you so long. So it's just the old switcheroony. So just highlight all of this Tavanka like that. And then I just went Control-C. And then down here, just click in one cell and go Control-V. Is that better? You can bring it in as a formula if you like. Go equal and then just... Yes, John? Beg your pardon? Well, I copied all of those down here. And then this says commission revenue debit, and that was unearned revenue credit. So put unearned revenue first and then commission revenue second. I just retyped them. Is that okay? And that's the general journal, so I'm just going to stop the recording.
Oh.